Breaking news on Martyn Lucas Investors channel. We're looking at Palantir stock, a massive drop, one of the biggest losers in the market today. Why has that happened? What happened with the earnings? We're going to break it all down. We're going to do a full technical chart review as well. But before we get any further, anything I say in this video is not financial advice. This is just my thoughts and opinions only. Please do not trade based on anything I say. This is the charts will be dubious speculation, so please just know that's my own thoughts and opinions, and please don't trade off what I say. But getting into it, here is the news on why the Palantir stock is down. We had sky-high valuation expectations. Despite beating revenue estimates and matching earnings per share expectations, Palantir's stock declined as investors anticipated a more significant earnings beat given its premium valuation. Remember, we've said many times the PE ratio on the stock is pretty much outrageous, and for investors to keep staying excited about it, what they wanted was these continuous beats on earnings, not just matching expectation. Another reason was weak international performance. While US commerce revenue surged 71% year over year, international commercial revenue, particularly in Europe, declined 5%, raising concerns about global growth. Number 3, modest full-year guidance raise. The company's raised its full-year revenue forecast from 3.89 to 3.9 billion, slightly above previous estimates, which would have underwhelmed investors expecting a more substantial increase. A very, very small increase in guidance there. Market-wide pressures, broader market declines influenced by geopolitical tensions, tariff announcements, and also has also contributed to the stock growth. So just a quick summary of what the earnings actually were, and then we'll be looking at exactly this double top pattern on the chart as well. A potential sort of 70% retrace for Palantir, that could be on the cards. A 60% drop in price. Why I wouldn't be touching Palantir right now, that's all coming up in a second. If you are enjoying the video so far, please do hit the like button, and do leave your thoughts and comments down below. Are you buying Palantir? Am I completely wrong in saying I don't like it right now? Please do subscribe if you haven't done so already as well. So the revenue is 884 million. That's up 39%. The earnings per share is up 0.08, so it is profitable, 0.13 per share. We've got revenue up 55% year over year. We've got US commercial revenue up 71% year over year. Operating margin adjusted 44%, gap 20%. Free cash flow is 370 million. Customer growth 39% up year on year. Major deals, we've got 139 contracts over 1 million, including 31 over 10 million. Lots and lots of contracts. So what's the outlook? Palantir projects Q2 2025 revenue to be between 934 million and 938 million, and expects continued profitability. The company anticipates full-year revenue of 3.89 and 3.9 billion, with US commercial revenue growth of at least 68%. Despite strong performance, the stock decline reflects the challenges of maintaining higher investor expectations and premium valuation. Palantir's we've got some stats down here as well. The market capitalization is about 291 billion. We've got the next earnings report, obviously that will be next quarter. That will be interesting to have a look at, because investors are expecting a lot out of Palantir. That's why it's got such a high valuation at the moment. It's because investors are expecting Palantir to continue what it's been doing previously, which is just beating expectations, and showing massive growth, which is now not as massive as they were expecting. What I wanted to show you here was the price to earnings ratio is 657 times. I mean, that is ridiculous in my opinion. We were looking at Palantir on this channel around $10 to $20. We were looking at it down here, and at those levels it made sense. We had levels of take profit or resistance to get out of our positions at $45, $70 and $109. So all three of the take profit zones for me, for myself, were all hit. I no longer want to be part of the stock, especially when it's trading at $123 and today pre-market at $114. Those take profit zones were all three were hit at buying at $15. Let's say the average was between 10. Actually, we're looking at this at $6 as well, but let's say the average was $13. We made 217% on the first take profit, 400 on the next take profit, and finally, by the time I was all out of my position, I was that was a 700% gain. At these levels, Palantir to me looks overvalued. I think there's more opportunity out there in the market. Looking at the technical analysis, what you've got now forming on the weekly chart, you've got a double top. You can probably see it on the daily chart as well. You've got a situation where you've got a double top, a double top structure. You're probably going to come down as soon as you break $109 on the chart, which could be next. Be careful. $70 is very much in play once again. Those levels might be more appealing, but I would just be very, very cautious of Palantir right now. Earnings was not what investors were expecting. Yes, it's met expectations. However, it's not what investors were expecting, the sort of beats you'd want from a company like Palantir, which is trading that much above earnings. The chart is not looking too bullish. Double top structure. I would be very careful with Palantir. But leave me your thoughts down below. Let me know what your thoughts are. Am I completely wrong? Am I not understanding why the company's trading so high above its earnings? There'll be a video up here and a video up here. Please do watch them. That will also tie into this video. Until next time, take care of yourselves and each other.